There's 4 rules I live by in the crypto space to have success. Rule number 1, education is key. Education is everything. Rule number 2, never invest money you cannot afford to lose. Rule number 3, always get a return on investment back as fast as possible. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What are you willing to do to make that happen? Make a decision, find a vehicle, take action, stay focused, and do not get distracted. Now, following these rules is not going to guarantee you success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. Good morning, Tony Pinkston. All right, so let's go ahead and kick things off. I got a very, very busy morning. Got doing this crypto talk, followed up with our presentation at 12 p.m. Eastern, 9 a.m. at the top of the hour for our philanthropy company. And then I'm doing a special first Coinbit Pro training of 2020, 2 p.m. Eastern, 11 a.m. Pacific. So we're going to kick off the year with our crypto trading training. First of the year, you got to be in our crypto education program, and I cannot stress the importance of crypto education. If you are not in it, or you are not investing in it, you're not focused on it, you're going to be left behind. We've got the country of China forcing all of their government employees and children are forced to learn about blockchain technology. They have an anti-blockchain law that just passed, and it went into effect January 2020. We don't want to be left behind, so that's very, very important. So I'm doing that first crypto training at the end of this, actually right after my crypto talk. No. The philanthropy presentation at the top of the hour, crypto training at 2 p.m. Eastern, and then at 3 p.m. Eastern, Peter Blackwell will be doing the Crowd One International. It's more of a exposure than it is of a presentation, but exposure. I mean, that company, what they're doing is on fire. So if you want to see, he's basically just showing the website. You know, I'm a presenter. Peter's more on, look, I'm just going to show you what's going on. So that's going to be at 3 p.m. Eastern, and then I'll be done for the day. Should be. I don't do presentations Saturday night. All right, so let's go ahead and see what's going on in the market. We got the market cap is at $194 billion. It is up 1.1% over the last 24 hours. Bitcoin is at 73.14. The chart is primarily green. It should stay that way right now, even though the last hour looks to be flatline. But Tether's in the last hour's in the red. So we're pretty much flatline right now. Let's look at the news. First up, Bitcoin set for 580% rally this year. 580% rally. Co-founder and managing partner of the crypto lending platform Nexo says Bitcoin may hit 50K or higher this year. The other day, we heard him saying anywhere between 50 to 100K this year. Remember that one? That was from the CEO of, I forgot which company that was, but he said 50,000 to 100K by the end of this year. And a 580% increase from its current price of 7,391. Okay, I got to go in dream mode again. I love doing this. So, why is my phone beeping like that? I haven't heard that type of beep. All right, so let's say I got my 100 Bitcoin at today's price, 7,300. $730,000 worth of Bitcoin. But those same 100 Bitcoin before the year is out goes to $50,000 a coin. $5 million. All right. From an investor standpoint, if you're working a 9-to-5 job and you're making $75,000 a year, and you put, I don't know, 20% of it in savings, how much would you have at the end of the year? What if you invested all of that $75K, every dime you made, into the stock market, and the stock market gave you a 25% return for the year? That would be pretty good from a stock market perspective. You just made 25% of your money for the year. But look what it took you. You had to put every single dime that you made this year in. What if you bought gold? $75,000 worth of gold. Where would that be by the end of the year? But if Bitcoin hits $50,000 and 100 Bitcoin, you know what? Let me even use the same $75,000 analogy. You bought $75,000 worth of Bitcoin. Divided by 7,300, let me see how many Bitcoin that is. That's 10 Bitcoin, 10.2. So those 10.2, you multiply that times $50,000 a coin. That's $510,000. Again, Bitcoin is the best investment asset of the last decade, and it's just getting started. That's why I'm on a run right now. 100 Bitcoin by May. So I think that very easily we could see Bitcoin going up to $50,000 by the end of this year. We have our analysts at Nexo crunching the numbers and doing very substantial research, and it is just a hell of a ride. It's the halving coming up. There we go again. See, I saw this last year. It's the halving coming up because the reward for miners are dropping. The last time this happened, Bitcoin rallied 4,000%. It's actually 4,500. And it's been an incredible asset. It's uncorrelated to the overall market. It delivers systematic, asymmetric returns. Trinchev says he believes Bitcoin's narrative has changed in the last few years. Instead of being the new form of cash, he says Bitcoin is emerging as a digital form of gold. I agree with that. I said that 2 years ago. The initial idea was we're going to pay for coffee with Bitcoin, but obviously that has failed to materialize. Well, I don't know. You go down to Venezuela, you can buy Burger King with it, burger and fries. I think the narrative now that is much more persuasive is that Bitcoin is the new gold. And we see confirmation like the turmoil that we have this morning. Bitcoin is rallying on par with gold. You know why that is? What major news is going on right now? This is why geopolitics is so important. Why is the market spooked? Why is the price of oil going up? Anybody can take a guess what's happening in the world? I'm going to cover that. And in terms of just the sheer price action, if Bitcoin is the new gold and it just captures 10% of the total market cap of gold, which is around 8 trillion or 9 trillion, there will be Bitcoin at $50,000. And I think it's going to capture much more than 10% in the future. I just don't know how long that'll take. Gold proponent and Bitcoin critic Peter Schiff, oh, wait a minute, something just caught my eye. Bitcoin is a new gold and it just captures 10%. What do I always say is my target? Anytime that I'm told something, anytime that somebody's trying to hype me up on anything, I always look at what if they're only 10% correct? Just 10%. Can I live with that? And look what he just did here. I like it. I know this is why I know I'm on the right thinking. This guy says, even if the new gold, this is weird. I haven't seen my phone doing this. Was this an earthquake? No, that was the other day. It's fully charged. So even if it gets 10% the market cap of gold, That's still $50,000 of Bitcoin. You got the right, it's Iran. Good morning, Bethany from Seattle. Good morning, my cousin Marnita from Colorado. Gold proponent and Bitcoin critic Peter Schiff says the leading cryptocurrency has no chance of competing with gold as a safe haven asset, despite the rise of both assets on Friday after President Trump's missile strike in Iran. There was no missile strike in Iran. It was in Iraq against an Iranian general. Get it right. That makes a big difference. You know, the first I heard about that strike was from my wife. I was working and didn't have the news on. And the first question I asked, she said, we just killed the top Iranian general. First question I asked was, where was the strike? Was it in Iran or was it in Iraq? Because I knew about what was going on with the embassy and I knew we was going to do something. And she said Iraq, and I was able to breathe. Because let me tell you something. If we had done that drone strike and killed that general in Iran, the world would have blown up. They would have had no choice to respond. Their allies would have responded. You would have heard from Russia, North Korea, China. Our allies would have said, what in the world are you doing? The fact that it happened in Iraq, we can claim a form of self-defense. But we'll get into that in a moment. A recent report by Charles Schwab found millennials are the primary demographic interested in digital assets. It found millennials are choosing to buy Grayscale's Bitcoin Trust, which is fully backed by Bitcoin, instead of shares of Microsoft, Walt Disney, Netflix, or Warren Buffett's Berkshire Hathaway. Now, why would you? We call it, that's my parents' stock. That's my parents' investments. This new generation is like, no, we're going into crypto. Best performing asset of the last decade was Bitcoin by far. Nothing even comes close. All right, next article up. New report busts major Bitcoin myths, electricity, and illicit activity. Anytime you hear a Bitcoin critic or a crypto critic, there's two things that they will always fall back on. And it's been since the very first time they started reporting on crypto and Bitcoin. The first thing they're going to say is illegal activity. Drug dealers are using it. ISIS is using it. Terrorist activity. Child trafficking. You're going to hear all of that stuff. And then the other thing they'll say, well, plus it's environmental impact with electricity. Takes up too much electricity. What's weird to me is when they say that there's no real world use case, that Bitcoin is created out of thin air. If that's the case, then why is it taking so much electricity? That is what's called proof of work. You just can't push a button and there's Bitcoin. Something needs to take place. It costs money to create Bitcoin. That is proof of work. I don't know what the new cost was. At one point, it was about $1,500 to create one Bitcoin, meaning the whole process, meaning the mining, the electricity cost for it, the time and effort, human activity. That's why not everybody's mining Bitcoin. Okay, so let's see what this says. A new research report conducted by Sasha Fleisman, a trader at digital asset management firm Arca, is dissecting two major narratives that dog Bitcoin and cryptocurrencies as environmental disasters that were designed to serve criminals. The report, Bitcoin, Energy Consumption as a Corollary to Environmental Impact and the Potential of the Evolution of Money, analyzes how Bitcoin's origin story from Silk Road, the first modern online darknet market where users bought drugs and guns and conducted other illicit activities, cemented public perception that Bitcoin is for criminals. No, it cemented you critics' perception. That is really bugging me. I don't know what that means. Writes Fleisman, the main argument stems from the belief that Bitcoin isn't governed by a regulatory body and is therefore anonymous and impossible to trace. That narrative is eroding over time as blockchain analysis companies such as Chainalysis work with law enforcement and regulatory agencies to use information that's recorded onto Bitcoin's public and open ledger to track down the senders and recipients of suspicious transactions. They're also using that for tax purposes, really, the IRS. As for using Bitcoin for nefarious activities, a report conducted in 2018 revealed that 46% of all Bitcoin transactions, 76 billion, were used for illegal activities. That is not correct, which fell in line with the percentages in the US and European black markets when you take into account the vast imbalance between the total Bitcoin market cap to that of the US dollar. It becomes evident that Bitcoin is dwarfed by traditional currencies in funding illegal activities. Wait. 2018 revealed that 46% of all Bitcoin, that is not true. It was actually like less than 1%. No, 5%. Because when Bitcoin was worth, let's see, I remember that number because I remember it said $5 billion. What was the Bitcoin market cap at that point? 100-something billion. At 5% was used for illegal activities. It might be even smaller than that. So I don't know whether 46% of all Bitcoin transactions, that is not true. The report also challenges the notion that Bitcoin is an environmental disaster, debunking reports that it will zap the globe of energy, and instead comparing the nascent technology to other innovations that require electricity, such as refrigeration. Now that's only partially true. Bitcoin does take a lot of electricity. Is it to the point that it's going to zap the globe of energy? No. Because technology is also being built to bring that cost of energy usage down. You got projects like Green is doing that. Is there a problem with Bitcoin because it needs electricity? The same argument could be made for refrigeration, which is completely reliant on electricity to keep products cool. Does that mean that refrigeration has a systemic problem? No. While the total energy consumption of the Bitcoin network is more than the entire electricity expenditure of Colombia and is roughly on par with Switzerland and all gaming systems, the study argues that the energy in use is converted, not wasted. The notion that Bitcoin is wasting unnecessary energy is false. Bitcoin is more often than not using surplus energy that is expended, whether or not it is put to use. Energy generators operate under peak capacity, meaning that there is often too much energy produced in case of a surge in energy demand. When compared with the energy consumption of the legacy financial system, according to the report, Bitcoin is on par with gold mining. Bitcoin's 0.27% share of the entire world's electricity expenditure equals gold's crude oil usage for mining, 0.27%. Fleischman argues, however, that comparing legacy systems, such as the U.S. Federal Reserve, to Bitcoin in terms of raw usage of power is a misunderstanding of what the blockchain network is intended to do. While Bitcoin also consumes a seemingly enormous amount of energy, the purpose of that energy conversion is not to function, but to strengthen the underlying security of the system. Crypto mining is also increasingly reliant on renewable energy sources as it drives innovation in the sector. With the main operational cost of running a mining operation boiling down to electricity cost, it comes as no surprise that Bitcoin mining farms are turning towards large-scale renewable energy sources, subsidized to a rate that minimizes the electricity expenditure in the overall cost equation. All right, good deal. Let's go on to the next. And the last. This is why it's important to pay attention to geopolitics to see how it can affect each and every one of us. There are things that are outside of our control. There are things that happen that we couldn't have thought of. We didn't know it was going to happen, wasn't on our radar screen, but it happens. And the old saying is not important what happens to you. What's important is how you respond to what happens to you, how you're able to react. Will you see it as an opportunity, or will you see it as a crisis? In the Chinese language and in the Japanese language, they do not have a word for crisis. That translation is opportunity. And I covered that the other night when I did The Secret Facebook Live. So what new quote-unquote crisis is happening on the world, and how can that be turned into an opportunity for us? Remember, you can't control what they do, but you can control how you respond to it. So Bitcoin will moon if there is war with Iran. The fact that they even make that statement means that they believe, I haven't read this article yet, but what their belief is, a war with Iran is going to destabilize the entire world market. Now, there is no way in the world Iran can match the United States military to military. America has the biggest, baddest military on the planet, and if we're crazy enough, we can push a couple of buttons and nuke Iran. However, Iran can beat us on a different playing field. Doesn't have to be tank to tank, ship to ship, fighter plane to fighter plane. Iran has more than 1 million standing army, and then a whole bunch more before. Let's go back to their war with Iraq, where Iraq was being backed by the United States. Remember the Iran-Contra affair from the 80s? But you go back into the 70s and the 80s. Iraq had modern military equipment, and Iran had horses. Yet they had wave after wave after wave of people willing to run across the desert through minefields to clear it. Human sacrifice. They were zealots. They were willing to lose more than the Iraqis were. They can attack us through our proxies, through our allies, through other countries, through soft targets, through assassinations. They can disrupt the Strait of Hormuz. They can do a lot. It's like one bee can't kill you unless you're allergic to it. But what if you got 1,000 of them stinging you all over the place? So when the market is being disrupted like that, stock market's going to react, the oil market's going to react. And what do people do? How will people react to that? Will they just ride the market all the way down, or will they look to move their money into a safe haven? Well, that's obvious. They're going to try to move their money into a safe haven. That's why the market's going to react. People are going to pull their money off the stock market. They're going to sell. That's why the stock market's going to, I don't know if you're going to call it a crash, but where are they moving their wealth to? What options do you have? Real estate. In times like these, it's mostly precious metals, gold and silver. But there's another option, cryptocurrencies. Bitcoin, Ripple, Ethereum. This is going to be the first big test of this. So the first article we read said that because of our strike on the general, gold and Bitcoin started to rally. So if I look at, let's look at Bitcoin here. Today is Saturday. When did that happen? On Thursday? So let's go back 7 days. Here's when it happened, January 2nd. We were approaching, Bitcoin had dropped below $7,000 a coin. and analysts thought that it might go all the way down to below the $6,000 range. And then all of a sudden, boom, Iranian general gets blown up. And then look what happened. Bitcoin jumps up more than 7,300 right now. So this type of jump is called not natural, but something took place. It's artificial. This is why I say analysts who all they do is read the chart and they try to determine just off the numbers, they're missing the human element. And I'm going to talk about this more in the when I do the training with Coinbase Pro members. So let me not go into too much of it right now, but I just wanted to show you the reaction in the market. This happened. That was not natural. It was an outside force. So it behooves a speculator to speculate, and nothing gets the attention of the speculator more than the classic market catalyst of war in the Middle East. So last night's U.S. strike killing Iranian General Soleimani is a sort of event that gets markets moving. As one might expect, oil jumped, and so did gold. Oil is up 3%, and gold jumped 2%. In this new world, there is a third safe haven asset. So think about that. Traditionally, two assets, gold, oil. In this world, there's a third safe haven asset, Bitcoin. It's up 5%. Bitcoin is up higher than gold and oil. Here is a chart of that action. Okay, so I can't zoom in on this. So you see, which one is this Bitcoin right here? Can't tell from this chart. This is a very interesting chart because it shows the global professionals reacting to the news much faster than the private traders. And it might be suggested this hike is the result of Middle Eastern retail piling into BTC as a flight to safety rather than the relatively non-existent institutional money. In any event, Bitcoin has the most beta in this situation, and what's more, there appears to be plenty of time to get your trade on in response to the news. This, of course, is a gift to all skilled traders, a 3-hour warning to buy. Long-term, however, it is clear to see that in instances where there is trouble in capital-controlled countries like Iran and China, Bitcoin will be a key asset when times get sketchy. As such, for those speculators who think of gold and oil as a place to trade when war in the Middle East is on the rise, then Bitcoin is the place to be. For those wanting to trade what might be a U.S.-Iran escalation, Bitcoin is the place to do your thing, because while there are trillions in gold and oil to suck up demand, there is only a smattering of Bitcoin to take the sort of buying surge a country like Iran could create, were the situation to spin up into a large-scale conflict. Bitcoin is the best place for flight capital and haven capital for those in Iran wishing to protect their assets, and that alone is enough to drive Bitcoin back towards its previous all-time highs. Then there is the exaggerated beta of Bitcoin that will draw in the global speculators and their wall of money, so that in an extended and fraught U.S.-Iran conflict, only one thing is certain about the price of Bitcoin, and that is it will be far higher than it is now. Okay. The bombing of this general is like lighting a dynamite stick. It hasn't exploded yet. But everybody is on edge because now the entire world is asking, what is Iran going to do? Will they respond? Absolutely. 100%. I'm old enough to remember the news and the feelings around the world from after Iran-Contra in the 80s to the Gulf War 9/11, Afghanistan, it was a different feeling then in those conflicts than now. Because as far as Americans are concerned, during those times, we had to react. It was a necessity. In this case, and all of our allies were for that. In this case, we're not seeing that same coming together, not only amongst allies, but even in our own country. And I'm seeing far more the feeling of, oh no, how's Iran going to react? Instead of, do something, we'll slap you right back down. We're not so much as that. We're concerned about how they're going to react. And that is telling. That means we are in a new situation. This is uncharted territory. Now, what of our control? I'm not playing politics here. It doesn't matter whether you support or do not support. It's just a matter of this is what it is. So how will we react to it? How can we take advantage of this situation? Well, if the dynamite stick has been lit and it explodes, are there moves that we can make before the dynamite stick explodes to take advantage of the fallout? This is what millionaires and billionaires do. Iran could respond next week or 9 months from now. Who knows? It just depends on because they're also thinking too. If we respond, they have to be measured in this. Because in their minds right now, they think they might be in an all-out war. We know. But they also know better. That's why I said the first question I asked was this attack in Iraq or in Iran? If it was in Iran, it's a different ballgame. But they're also thinking too, if we respond too crazy, America will also retaliate. And we're not talking about just targeting one general. America can destroy their entire infrastructure before we even send any troops in on the ground. So they are also thinking about that as well. And that's going to take place. How can we respond? Yeah, it's going to piss America off, but at least we got our message across. We let our people know that we're not going to just sit by and let one of our top generals just get taken out like that. We got to respond to it so we're not seen as weak, but not too much so that the United States decides to destroy us and bring the whole world with it. But what we can do is prepare, and again, as a disclaimer, I'm not a licensed financial advisor. You can make some moves before that dynamite stick takes off and profit from it, just like I'm looking at this chart. The moment that Iranian general got bombed, if you made a move here, so, oh, I'm buying, you would have made a profit because you know this was going to happen. But if there's a prolonged war that takes off, if the world explodes, this is going to go straight up, which means we can take advantage of that. That's all I'm going to say. I'm going to speak more on this on the crypto training. For those of you that's in, you're a pro member of Coinbit Pro. We're going to be doing that at 2 p.m. Eastern, 11 a.m. Pacific. If you are not, you still have time to do so. Shoot me a message wherever I invited you. We'll get you the link. You can get signed up and be a part of that. But there's, in the mix of people, or wow, we're about to go through another war and a crisis, there's opportunity. Opportunity for each of you individually. If you know how to take advantage of it, if you know how to read the numbers and read the charts and read what's going on in the world, have your pulse on the world. All right, that is it for Crypto Talk for today. Next up, at the top of the hour in 20 minutes, I will be doing our philanthropy presentation. You guys already know what that link is. If you do not, you want to see what that's all about, shoot me a private message. I'll get you the link for it. And then I've got at 2 p.m. Eastern, our first training of 2020 for crypto training. And then my partner from Sweden, Peter Blackwell, at 3 p.m. Eastern, will be doing the Crowd 1 presentation or exposure on that. I mean, that is crazy. I think I was talking to Peter yesterday. We're talking in 6 months. He's now at, and I can say this because he's not going to say it, but between 20 to 30K, not a month, a week, after 6.5, 7 months of what he's been working on. That's crazy, and I've watched it happen. 20 to 30K about a week. So those of you that have international, one thing I'm looking at, anybody in Australia, Canada, Mexico, and Africa, if you have contacts there or you are there, you want to contact me. Those are some of the countries that I'm personally targeting. Canada, Mexico, Australia. You know, Australia's on fire. What's going on over there? It's like the whole country's lit up. And then also the entire continent of Africa. Hot markets that's kind of untouched. Every 3 seconds, somebody is signing up in Crowd 1 right now. Every 3 seconds. That's how fast this thing is moving. All right, with that, you guys have a great day. If I don't hear from you, if you want to be plugged in, shoot me a private message. And I will be back tomorrow morning for early morning crypto talk. And then that evening, I will be doing the Sunday evening presentation for our philanthropy. Have a great day, everybody. God bless. Happy New Year. See you all later. Bye-bye.